Hello traders out there in Traderland. My name's Dez here at Grok Trade on Thursday, December 15th, 2011. Dow and the rest of the indices in positive for the day. We had the Dow up 0.38%, the S&P up 0.32%. Break even basically for the Nasdaq. Russell's up over 1%, so small caps leading the charge. Drop down here, banks doing exceptionally well, 1.3% compared to the other indices doing very well. The VIX dropping by 3.6%. We are back at 25 here on the VIX gang. Gold continues to bleed out, down 0.4%. Silver up 0.5% after yesterday's bloodbath. And we have crude oil down 1.45%, and the dollar was down 1.3%. We have oil right now at $93.39 at the time of this video, and gold sitting at $1,573. Initial jobless claims fall to a 3-year low, coming in at 366,000 for last week. Food prices push the producer price index for the PPI higher in this morning's report, up 0.3% for the month and 5.7% for the year. The core rate was up 0.1% and 2.9% yearly. Let's take a look here at the markets. I saw a pundit say, the markets are trendless right now. That's, I would say, ignorant. We are in a trend. It's called consolidation or sideways trend or a trading range that we're in. It's a big one, and in this case it's consolidating, coiling, getting tighter and tighter. This is building much power. You're hearing it here, and if you're new with us here, you'll find out that we are the very best when it comes to technical analysis on the broad markets. There's no one better that analyzes the S&P, and you can use this to your benefit because the markets roughly reflect 70-80% of what's happening out there overall in all the equities, all the stocks. So if you can read the markets well, you can trade well. So that's why we spend a vast amount of time on the broad markets, especially the S&P. Now, we're in this big symmetrical triangle. Symmetrical triangles is a pinching pattern. The pinching patterns builds up strength. It's a coiling. It's a building of pressure inside the boiler. And you're hearing it here. I'm expecting a major pop to the upside or a major drop to the downside. This is going to be a big move when it happens. Mark my words on that. Furthermore, we had this bull flag that started to make a run, but it smacked its head on this upper trend line. It's pulling back. It pulled back to the 50% Fibonacci level. It's finding some nice support right here. We're caught up in these moving averages. See how the moving averages are nice and spread out here? But look how those moving averages coil on top of each other. See how they tighten and tighten and tighten, building energy. Let's zoom in. As we zoom in, you can see that we have an inside trading range candlestick, lower high, higher low. It's hard to see the lower high right here, but it came up, found resistance at the 1225 area, which happens to be a 38.2 Fibonacci. Came up, found that as resistance, not the 50-day moving average, but it did go through the 20 at one part today, came right back down. Now this here is called an inverted hammer reversal pattern. It's a candlestick reversal pattern. If we go higher than 1225, expect continuation and an up leg to ensue. Furthermore, anytime you have this, you get a body that's in the lower part of the previous candlestick, you get a thrusting pattern. Technically speaking, we should have had a gap down. We had a straight across horizontal move. So by the textbooks, we do not have a thrusting pattern, but it is close enough. But we certainly have an inverted hammer, and we could even say that we have a bullish harami in the thrusting area. I know it's very technical for a lot of you. If you want more information on technical analysis, go to the chart school and then go to the candlestick reversal patterns and learn them. and you'll be glad that you did. Because of what I'm seeing here, after an extended drop and pulling back 50% and seeing a reversal pattern, I think that there's a better chance of us going higher than lower. Now tomorrow we have the CPI coming out, and that can act as a market moving event. However, it will be a Friday. Because it's a Friday, volume should be lighter, and with that should come indecision in the markets, or not a significant move one direction or the other, which will set us up in large part for a nice move to take place at the beginning of this next week. So tomorrow when I do the weekend edition, you will not want to miss that video. That will be a key video. Alright, that's it. I'm going to keep this short. Take care, safe trading. Give me a check mark down there at the bottom. Remember, you can chat with me directly on the website now in the comment section. Leave your comments. I read those. Thank you for doing so. If you're on Facebook, check us out at facebook.com/Grok Trade or Twitter/Grok Trade. Take care.